One stock which has been in focus is GHCL. My colleague Vinny yesterday after the market hour broke the story that GHCL is looking at selling their uh, their Vapi business to Indo Count, and that news has come true. What's the thought behind it? Why has the company changed their heart? Because they were looking at separating the business into two, and why have they decided to retain the spinning business? To discuss that, we are now joined by the management of GHCL, Mr. Arish Jalan, Managing Director of GHCL. Mr. Jalan, good morning. Thank you for joining us. Mr. Jalan, there has been a change of heart from GHCL. You wanted to first separate the textile business, you had gone to NCLT, and now you've decided to sell it to Indocount. Textile as a sector is making a comeback. Why have you changed your initial thought of separating the company into two?
See, good morning. We have not changed our thoughts of separating the textile business out of the GHCL. That process continues. However, during the period of we got an opportunity of selling the home textile business, which was not a very significant business in our overall scheme of things. If you look at in terms of 3.5 years, which is slightly a reasonable period, our EBITDA from home textile was only 22 crore per annum. And the spinning business, which you rightly said we are retaining, which is a more rewarding to us, our EBITDA was around 108 crore. So overall, in this scheme of things, we are only separating a very small marginal piece of our textile business, and our focus on the spinning business continues. As you must have seen that we have already committed around 500 crores of investment into the spinning business. So our growth on the spinning business is continuing, and our core business of chemical also is growing. We are also investing money into our new greenfield project. So overall, in the whole of the scheme of things, the home textile which we are planning to sell, the EBITDA margin in the entire GHCL was only less than 5% in the absolute number. And the EBITDA margin of the home textile, because we have not been able to fully utilize those assets, and we have not been able to generate the resources for our shareholders. So keeping that into mind, we thought the opportunity has come in. It was the right time. This opportunity was there, as you rightly said. Home textile is slightly doing better at this point of a time, which we cannot take for a longer period of time. So we thought the right time to get the right valuation. This is the right time to invest. However, our journey of this demerger of the textile business or the spinning business continues. In next 6 to 8 months, we will demerge the spinning business and grow the business, both the businesses independently.
Okay. But would you be open to selling the spinning business as well if you get a right buyer? Because you're not the largest in India in terms of the spinning capacity, even though you've said that you would be investing money in it. But if you get a good buyer and a good price, would you be open to selling the spinning business also lock, stock and barrel?
You see, basically, if you look at in terms of in the business, you cannot say anything at any point of time. And at this point of a time, like I said, we are committed to the spinning business. And we have been, if you look at our record of 15, 20 years of the spinning business, our EBITDA margin has been very, very good in terms of 15 to 18% EBITDA margin, which is a kind of a benchmark in the spinning industry. So we are doing fairly well in the spinning business. I don't think at this point of a time, we will be looking at the possibility of selling the spinning business. Whereas the home textile, we have not been doing good on that business. And in the business, we should not be emotionally connect with some business. If you are not doing good, it's better to exit from that business and put your resources, management time, your resources into the business where you are good at. So we are good in the spinning. We'll keep on growing in the business. We are good in the chemical business. You know, our market share in the chemical business is 25%. And we are growing in that business. We are also looking at expanding our product basket into the thing. So let's focus the management time and the resources in the area which makes create a value for all the stakeholders. From that perspective, chemical and spinning remains our core strength.
The inflow which you will have because of the exit of home textile business, how much will that be earmarked for debt reduction? How much will that be marked into business expansion?
See, primarily this entire resources will go into the growth of the business. Like you know that we are investing into the chemical business of a greenfield project. we are also investing into the spinning business. The entire resources in the medium terms will go back to plow back to the growth of the business. Because we are already debt-wise, we are very low. We are less than 0.2 debt equity ratio. We don't want to be a resource to be utilized for the purpose of debt reduction, rather to utilize those resources for the purpose of growing the business, have a better return, because almost our return on equity will be in the range of around 18 to 20%, whereas the interest cost is around your 7 to 8%. It is always better to invest this money for the growth.
Good morning, Mr. Jalan. So you made it quite clear that it's good to not have an emotional decision. It's better to get rid of a business and divest it if it's not doing well. That's what you've done. You want to put it into the growth of the company. So tell us more about what kind of growth plans you have, what expansion plans you have.
See, if you look at our spinning business, let me start with the spinning business. In the spinning business, we are almost on a reasonable side. We have almost around more than 200,000 spindles at this point, which is a reasonable size. We want to make that already 40,000 spindles are already underway, and next few months that will get started. And subsequently, we have another investment plan. And recently, we have signed an MOU with the government of Tamil Nadu to make an investment of 500 crores. So even including that, we are also putting an investment into the green energy, which is a solar energy. Already 10 megawatts are already underway, and we have placed the order of another 10 megawatts. So all the growth plan in the spinning, we want to definitely come to a stage we have something around 300,000 to 400,000 of spindles there. And we are doing good in that business. Like I said, if you look at 10 years of our data, you'll find our return or EBITDA margin is more than 15%, 15 to 18%, which is a good for the spinning business. In the chemical side, as you know, that we are one of the largest soda ash manufacturers, 25% market share, and we are already made an investment. Land has been acquired. I've been in the process of putting another 500,000 of soda ash manufacturing in a new greenfield project, which will cost around 3,500 crores of investment. So both these areas, we are looking at growing the business going forward. Because now our motto is to grow both the businesses which are our core competency and come to a stage where we can say that we are one of the largest producer of soda ash, or we are one of the reasonable player of that spinning business.
Okay, fair point. Now, your business is soda ash as well as, providing materials as far as glass companies and all go. Just because of the way things were, there were major disruptions that had taken place earlier this part of the year. We also seen how soda ash prices have been behaving. What has that meant for business?
See, soda ash business is really doing good. As you rightly said, at this point of a time, our all consuming customers, they're all doing good. Glass are doing good. Even detergents also started doing good. So overall, the consumption has gone up, whereas supply chain globally has come down because of the China factor. And therefore, the soda ash prices has gone up significantly higher. And that is good for the GHCL business. Our margin expansion, you will see in coming quarters, you will see our margin expansion will be significantly higher than what we have been achieving in the last few quarters.
One side, which is the demand side, but on the raw material side, we all know that how energy prices have gone higher. We all know that how international coke prices and coal prices have gone higher. Coal is an important ingredient for all soda ash manufacturers. How are you planning to ensure that you are hedged and you are insulated?
See, like you rightly said, the energy prices has gone up. But fortunately, in last one month, the energy prices have started coming down. If you look at the coal, which is a very, as you rightly said, very significant consumption we do, the price has gone to the extent of the kind of a coal we are using, $260 FOB. Now it has come down to the level of around $150, $160. So significant drop in the energy prices has been seen in last few weeks, and we expect these prices are now going to be stable on this, and therefore this will also help us to expand, improve our margin. Of course, like if you look at from the past, the energy prices from $90 to $100 to gone to $150, $160. But the soda ash prices has gone up more than the cost of the raw material, and therefore the margin expansion will be clearly be seen going forward.
Finally, when do you see both the businesses, according to your internal assessment, they will list and trade separately?
And it will be around 6 to 8 months from now onward, because we have to file a new application to the stock exchanges. The good part will be that now the lender approval will not be a big issue, because in our total textile piece, the home textile was not doing good. And therefore, getting a lender approval has taken a little bit more time last time. But this time, this will not be, because the debt of textile will be very, very small. And keeping that into mind, I personally believe 6 to 8 months time, we will be able to get the NCLT approval of the demerger of a spinning business from a chemical business.
Thank you for joining us. Let's take a break. When we come back, we'll talk about some of the unlocked trades. And there is a visible action in hotels, multiplexes, even you got uptick, which is now clearly visible in some of the travel and tourism stocks now.